And let me, in fact, bring on board Shivangi Sarda from Motilal Oswal, Ajay Bagga, market expert, also joining us this afternoon. Shivangi, let me come to you first. With regard to the move today, what does it mean? There's also some bit of pressure which is building up on the 24K level, 24,100K level, or rather 24,100 level. Those two are levels where it seems at least that open interest positions have spiked. What's your take with regard to those levels, and what levels are we open to?
Very good afternoon. Thank you for having me.
Very
So
good
we've
afternoon.
seen that the indices have struggled near mid 24,000 levels. There was some bit of call writers that was still present at 24,300, which have limited the upside for the expiry day POV. But overall, for the next series, we're expecting good amount of positions to carry over. Now, of course, the rollover will speak for itself, but overall, we are seeing that support-based buying is quite intact even at 23,000 980 odd levels, we'd seen that there was a good amount of buying that was seen in the last hour, in the last tick. Now, to be to look at the daily chart, we've seen that higher bottom structure is intact, which means that the index will kind of face some bit of support at 23,900 for the next up move towards 24,300, which is on an immediate basis. Now, of course, talking about Bank Nifty, this index has been weighing down the entire market because of its underperformance. And till the time it doesn't cross and hold above 56,000, we would see some consolidation over here, with a support near 55,000 and the upside hurdle intact at 56,250 levels.
Right, quite interesting. Shivani, I'm curious to know whether you track the prices or charts of crude or not, and where is it that you see Brent headed next?
Yes, Aisha. Of course, crude prices is something that we've had to track from the last 3 months very closely because of the impact that it has on the entire market. And we've seen a lot of gap up, gap downs accounting to it. Now, of course, looking at the crude prices, we are seeing some bit of uncertainty here in the broader market because of the hike in the crude prices. So this shall continue, and there is some bit of hope that we could capture in the oil marketing companies. So this is the best that we could get from the volatility in the crude oil prices. So look out for stocks like ONGC and likewise for the movement.
Let's welcome on board Ajay Bagga as well. Ajay, hi, afternoon. Guess that's what life's been, right? Last 3 months, tracking what crude does as opposed to anything else. But given the, the spike once again that you're seeing on Brent, Ajay, what kind of an earnings impact do you pencil in now for India Inc.?
Yeah, there has not been a pass-through yet, Aisha, and I am a little skeptical, though Ministry of Petroleum has come out and said that these are wrong signals that are being put in the market, that post the state elections getting over, there could be a pass-through. So the facts are in January, India bought crude at $63 a barrel. In February, we bought it at 69. In March, it went up to 114. And April again is about $114 to $116 on average. So nearly about an 80% increase in our cost of import of crude oil has happened over March and April. Who pays for that? Right now, most of it is being absorbed by the refining companies, but that's not a sustainable proposition. Overall, from a $150 billion crude and gas bill, we'll probably looking at 200 to 225 billion around these rates. So who pays for that marginal 50 to 75 billion dollars of extra import bill? Is it the Indian consumer? Is it the Indian government via its fiscal, or the refining companies? So I think that we are not very clear about. The pass-through has not happened fully, though in a lot of the petchem products, the product itself is not available. In fertilizer, the prices have gone up by about 50%. but the product is not available. So there again, the government subsidy burden will go up by about 1 lakh crore odd in getting the fertilizers in time to the farmers for this upcoming sowing season. So very difficult, Aisha, right now to put a number to the margin contraction that will happen, but it's coming. The earnings overall at a macro level for the country will go down. And if this is going to stay, now it's not an if, the higher prices will stay till about $90, at least till the end of this year for India. So you are seeing something like roughly last year we were at $70, that going to $90. That incremental cost is coming into the economy, and that will be paid for by the margins. When you pass on to the consumer, demand destruction starts immediately because inflation goes up and you see demand going down. So it's a very difficult equation which the government has to handle. Let's see what they do. We will know by May first week what is happening. But definitely the price this year stays at $90, and that $20 extra will come in on an economy-wide basis, will be paid by any of these three players.
But Ajay, likely if that fuel increase were to come through and translate at a pump level, do you believe that that will happen in a more gradual fashion and therefore the absorption of it will also happen much better, or do you believe that it will be a one shot?
No idea, because if you see, it is about 15 rupees to 20 rupees is the shortfall per liter, petrol and diesel a little more. So I don't know how it would be passed on. I don't know how much of that is already in the price, because the government never brought down the prices, even when the when the crude oil went down. So I'm not very clear. What we are clear is that the government collection of 5 to 6 lakh crores will not happen on the taxes. They will have to support the refining companies. They will not allow the upstream companies to make make the windfall. Normally, they will put a $70 or something to the producer. Same for gas. There will be a much lower level. And above that, they will probably put a windfall tax, or there'll be some mechanism to transfer it to the government. So that's why I'm not ever keen on the upstream companies in India, because the government will not allow them to make these kind of profits.
Interesting you say that. Meantime, Indian Aviation is the one which is in focus right now. The Federation of Indian Airlines, Air India, Indigo and SpiceJet combined have sent an SOS pretty much to the government, stating that airlines are under extreme stress and on the verge of shutting operations, largely talking about their international operations. Remember, ATF prices have surged nearly about 75 rupees per litre on international routes, driving the fuel costs to nearly 60% of their total expenses. And that really is the urgent plea set out by the aviation industry, talking about temporarily suspending excise duty on aviation turbine fuel to try and avoid network cuts, grounding, as well as cancellations as well. So that's really the big debate this afternoon, whether the government should be looking at suspending excise duty on ATF immediately or not. Ajay, what do you sense would be the impact on the very limited listed aviation plays?
Aisha, it's a trouble across the world. I mean, in a free market like the US government is trying to take over Sprint Airlines. They're trying to put in $500 million into it. Other 3-4 airlines have got together. They've asked the US government for a bailout of $2.5 billion. So clearly, you would have seen last week Lufthansa canceling about 20,000 flights for the summer season, saying that they are no longer they don't make economic sense. The short-haul flights within Europe, they were canceling. So it is a very dismal issue. And I would say aviation needs to be looked like infrastructure, and some SOPs need to be given to infrastructure, to aviation, because the connectivity for the country is very important. And it's not a very profitable industry in the best of times. And now, definitely with these kind of prices, they are in a big fix. So I hope the government at least gives them some kind of a relief. Again, politically, it's not expedient because you would look at relief on the cooking gas front and then on petrol front and then diesel. Diesel, moment you hike, it comes into the food inflation because the logistics and transportation costs go up. That gets passed on very fast, and you have no monetary policy fix for a supply shock like this. So it has to be fiscal. The government has to balance out, and I would say this kind of an energy shock to such a fragile energy security-wise fragile economy like India, the government has to leave aside its fiscal prudence and step in and safeguard these industries. Look at them as infrastructure. Don't look at them as uh, the rich person's kind of industry, but it's a key infrastructure industry. And if we lose more players, we'll have a monopoly or duopoly kind of a situation in the aviation sector.
Okay. Let's
Positively, you can see that play out on the stock as well. While it dipped into the red, and now you're seeing a very, very sharp spike up, 1.25% higher for Eternal as we speak right now. And, it's quite surprising at a time when you've got the third QCOM player, which is waiting in the offing for a potential listing, which should happen soon. But you've got Eternal, which is, the Blinkit faction, which has delivered the way it has. 259 now on the stock price. It's already nudging that 260 per share mark. Ajay, would you want to comment on the QCOM space specifically within the listed pool?
Yeah, overall, they are well funded, Aisha, but still, I think we are looking for growth as well as some more profitability. I think that's what the market will look at. Guidance will be very critical. And the next phase, as oil prices flow through, what happens on demand? I think that's very critical. Again, the consumer economy in India still doing well. Urban demand growing at 8%, rural demand at 5.3, 5.5%. So right now we are okay. But what happens when the oil pass-through happens? That's the big question. It will impact all these consumer-focused companies as well. That needs to be seen. So we'll wait for the earnings call and see what the management guides for.
So wait for the earnings call, but 213 stores added, 216, I beg your pardon, net new stores added in the quick commerce side of things. They've done an EBITDA of 37